Hello and welcome to our special Earnings Central. I'm Arundhati Ramnan. So let's get into it. Two major banking names, Kotak Mahindra Bank and HDFC Bank, have come out with their first quarter numbers. And it's a tale of two stories, right? While Kotak Mahindra Bank reported a weak set of numbers, HDFC Bank's numbers have come in above estimates. Abhishek Kothari is here with all of the key highlights. Abhishek, why don't you start us off with HDFC Bank?
Well, to begin with HDFC Bank, they have beaten our poll with respect to both the NII and PAT. So NII beat is about 0.9%. However, the PAT is 3% above our poll. Take a look at the NII growth. Overall, it's a growth of 2.6% on a sequential basis. Now, other income is down 41.3% on a sequential basis. That's largely to do with the fact that they had, high treasury gains in the previous quarter. So treasury gains was about close to 7,600 crore that you had in Q1FY25. And right now it's about 220 crores. So that's an impact that you are seeing in the other income, which has declined. However, fee income has remained strong. So OPEX is down about 7.5% sequentially. The operating profits are down 18.4% quarter on quarter. But if you remove the treasury part from the operating profits, the core operating profit, that is taking into account the NII, the fee income or any other income apart from treasury and the overall OPEX, if you minus from it, then it looks like a strong show that the core operating profit growth is more than 9% on a sequential basis. Provisions are down more than 80% on a sequential basis, and they have reported PAT, which is down about 2% on a quarter on quarter. So ROA or return on asset is at 1.88% versus 1.96% in the previous quarter. Now, talking about the asset quality that is there for HDFC Bank, seasonality, if you see, Q1 does see a increase in gross NPA on a sequential basis due to agri portfolio, which actually slips into NPAs. So gross NPA in absolute value is up 6% sequentially. Net NPA is up 17.5% quarter on quarter, which suggests that the PCR or the provision coverage ratio that's declined. So my calculation shows that PCR has declined to 71.2% when compared to 74% in the previous quarter. However, as a ratio, gross NPA ratio is at 1.33% versus 1.24%, and net NPA ratio is at 0.39% versus 0.33%. And this 0.39%, net NPA is one of the best in the industry. Deposits, we already know the business momentum. Deposits were flat on a sequential basis. Advances declined by 0.9% on a sequential basis. Now, talking about Kotak Mahindra Bank.
Abhishek, right now, as you're speaking, Kotak Mahindra Bank's press conference has started. Let's go across to the management to see what they have.
Welcome back. You are tuned into CNBC TV18's special, which is Earnings Central. Now, we have Prakash Diwan with us. Prakash, now talking about HDFC Bank's numbers, how did the numbers look? To me, the net interest margin improvement on a sequential basis look good, and core operating profit, that is X of treasury, that grew by 9% quarter on quarter. Did that impress you?
Oh, yes, it did. And this is after all the issues that we've had in mismatches in CD ratio, the slow growth of deposits and their, the challenges they face in growing the book with all these constraints. So with that in perspective, I think it's a fairly impressive set of numbers. The key takeaway here is exactly what I was talking to you earlier about, and it's a coincidence that the Kotak numbers just came and we are comparing these, which we don't need to, but just to take a point from that discussion. What HDFC has demonstrated is what possibly Kotak would need to do 2 quarters down the line in terms of being able to grow credit, grow the deposit base, and maintain an organic growth in the NIMs as well. So from that perspective, it's good. And I also particularly want to point out the drop in provisioning, which is going to be a very big advantage for that's a significant change. And as you would have noticed, Abhishek, there is very clear indication that if that continues in a quarter where usually recognition of NPAs is slightly heavier, it means that the subsequent quarters will only start showing better metrics.
So you expect the credit cost to remain stable. Thanks for that, Prakash. Now moving on to Rahul. Rahul, what do you make of HDFC Bank's numbers, and what are you penciling in, and what has actually come out? Has that impressed you?
So basically, this is a decent outcome as per our estimates. So bank has reported higher than expected earnings versus our consensus and our estimates. We were penciling in stable NIMs, and NIMs have slightly improved. Core PPOP growth has been in the lower digit, 2% quarter on quarter if we exclude the one-offs in the last quarter also. So it's a bit better than expectations, and core credit costs continue to remain low. So overall, ROA at 1.8% is a decent outcome. Although there has been a certain dip in the asset quality, mainly likely to be led by seasonality in the agri portfolio.
Well, yes, every Q1, you do see NPAs of, HDFC Bank rising versus Q4. That is on account of the agri portfolio, which actually is a seasonal factor for them. Back to you, Aru.
Absolutely. Rahul, Prakash, thank you so much for joining us on the show and decoding those big banking numbers for us. And Abhishek as well. Thank you so much for joining us. But with that, it is a wrap of this special Earnings Central. Many thanks for watching, but stay tuned to CNBC TV18. More news and updates continue on the other side.